On today's episode, I'm going to take a look at my stock portfolio. I have three accounts right now. One of my accounts is beating the overall market by about 400%, and the other two accounts are beating the market by over 200%. So in today's episode, I am going to do the following. First, I'm going to take a look at my results right now and compare them to how it's been in the past. I kind of do like a monthly update, and it helps me keep track of how I'm doing with my investments. Second, I want to take a look at how to show that I am beating the market. A lot of people would just look at year to date to try to compare if their portfolio is beating the market, but unfortunately that is not the correct way to make sure if you're beating the market. So I'm going to show how I am beating the market and how you can go ahead and take a look and see if you are personally beating the market, and I hope you guys are. Finally, I'm going to take a look at my plan and my portfolio, show you guys what are the positions I'm holding, how many positions I'm holding, and how they are distributed. I've definitely gone through a big process through all my experience of 6-7 years. I have finally kind of shaped my own portfolio from learning from a lot of great investors, and right now, as we can see, it is doing pretty good. Like always, if you're new to my channel, if you're a long-term investor, if you'd like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for the support. It truly means a lot. Like always, if you want to get in contact with me, YouTube comments, you can find me on Twitter, you can find me on Twitch, you can find me at my Discord channel, which is free to anybody that wants to join, and you can also check out JoseNajarro.com. Finally, all of this is my opinions and should not be taken as advice, as I am not a professional. So make sure to talk to a professional before making any decisions. Alright, so like I mentioned, today we are going to take a look at my portfolio. Right now it's sitting about $54,500, and this is update for October 11th of 2020, and I kind of do an update every month to just see how my overall accounts are doing. And also let me know on the comments, do you guys think you're beating the market right now? Do you normally just look at year to date? How do you consider if you're beating the market? And I'm going to show how to properly check that out in a few. Also, if you want to know when I'm buying stocks, make sure to check out my Discord channel, which is free to anybody that wants to join. I post there almost like 5-10 minutes after I purchase when I buy. I buy on a weekly basis, so I post the companies I buy and how much. So make sure to join that Discord channel. Alright, so here I've been doing these videos almost on a monthly update, but unfortunately I can't keep every month here, so I'm just putting some of my months. So my overall, first let me just start off by saying I have three accounts. All three accounts, even though they're different position size, they're managed the same way. So to me it's an overall one account, because the reason I have three accounts is, one, I have a small account, and the reason I started that small account was because I wanted to show, I kept getting questions asked by my friends that, hey, do I need a lot of money to make money in the stock market? And so I kept saying yes, but instead of just keep saying yes, I decided to just make the small account and just deposit $100 every so often and show that it is growing. I have a medium account as well. Here, this is one where I started doing new things and new investment thinking, so I wanted to see how those results would turn out. Then I have my big portfolio. Again, like I said, all three are managed as one position. When I buy a position, I manage them all within like one portfolio. So even though it's three portfolios, at the end of the day I manage it like one. We can see when I first started my videos, which were in July 20th of 2020, overall, my portfolios had only given me gains of about $5,000, and that to me is actually pretty impressive, right? Getting $5,000 returns is amazing. Then came July 30th, I did another video about a month after. My returns were about $8,840, and those are pure returns on just gains alone. Overall, my account might have grown a lot larger because I do weekly deposits, but the numbers I'm talking about right now are pure gains. And I'm going to show you guys, you guys can see, I'm going to be as much transparent as I can so you guys can see that I'm not lying. Then came September 2nd, 2020. My portfolio was up at that time $14,400, and that to me is amazing. I mean that's a paycheck. That's a nice amount of money coming in of just pure gains. $14,000 can be a student loan, can be a car loan that one has. So you can see just the overall change that these types of gains can make in your overall life. Right now, sitting now in October 11th of 2020, my overall position size has grown 14,700. So we can see from September to now, about a month, it's only gone up about $300. But then when we take a look at the overall SPY market, the SPY, when I did that video, it's so funny. When I did that video, I actually did it on the peak of the market. So hopefully this video is not the peak of the market again. If it is, then congratulations, you guys. Just wait a few more days and you'll be able to buy things at a better price. But look, at the peak of the market, compared to the market from September 2nd, which I last did that video, to October 9th, which is when this numbers are for, the market is down actually about 3%. So I'm actually still getting better returns than the market right now. So I'm very, very happy to see that. And here we can see I have a small account, which right now is sitting at about $4,300. That small account is up $1,200. That's insane. That's 39% gains from where I had. Imagine that kind of returns on just a small position portfolio. Then I have my medium account that right now is sitting about $17,500. That one's up almost $4,750, up another 37%. And then the total, my big account is sitting at $33,000 right now, and it's up $8,800, and that's up 36% as well. So I'm very consistent with that 30%. Like I mentioned, right, I kind of managed all positions, even though there are 3 different portfolios, they're managed almost exactly the same way. So that's how we can see these overall returns. The reason like I mentioned, different portfolios, I wanted to try different things and just show that there's different methods to investing. And then right here, I also have a timestamp for those that want to see as of October 11th, 2020. These numbers match exactly these numbers that are up here, just to, again, be as transparent as I can without showing my true account numbers. So how are you beating the market, and how can one find out if they're beating the market? Unfortunately, right, a lot of people just look at year-to-date performance and compare it to their portfolio to show that they're beating the market. This is the worst way. This is a completely wrong way to check if you're beating the market. And I think it's people just try to make themselves feel better that they're great investors. At the end of the day, the main purpose of being an individual investor on active accounts is to overall be better than the SPY or just the overall market. So, right, for example, year to date, the SPY has returned, I think, about 6-7%. But right, if you bought at the bottom of the market, in March, your returns, the SPY returned over 40% already. So it's one should not look at year-to-date performance. What one needs to take a look at is when they deposited that money. So let's say for me, I deposit money into the market every single week. So I have to check when I deposited that money every week and compare it to how much would my portfolio be if I would have bought SPY on that market. And that's how you get to really see if you beat the market, right? Because now especially the only time you should do year to date is if you only put money in the market at the beginning of the year and never put money any other time. So for example, here, there's this great website, which is called amIbeatingthemarket.com. And when you put am I beating the market, what you end up doing is you put up, and a lot of this information you can get from your broker the day you deposited that money. And then you can have a weekly, however often you put it. Then this website, what it does is you can put like how you deposit, how you invest. I do 100% stocks. So it would put that money into the SPY and give you the overall results. So let's take a look at my big portfolio. My big portfolio in total, I've deposited about $26,300. If I would have invested in the SPY, it would have been $29,000. That would have been returns of 10%. With my current investments, I actually have it at $33,000, which is 25.7% returns. So I'm beating the overall market by 250% there. Now in my medium account, I deposited a total of $12,576. If I would have invested in just the overall SPY, I would have gotten great returns at $15,000, would have given me 20%, depending on how I put that money to work, right, on that time. So, but right now, my current value is $17,400 opposed to $15,000. And that's almost 39% returns. That's again close to 200% returns compared to the overall market. So this is what I like to see because I am investing. I spend my time researching companies, and obviously for me spending my time, I want to be doing better than the overall market. Then I have my small portfolio. My small portfolio, I deposited $2,889. If I would have just invested in the SPY, again, very great returns of $3,100, which would have given me about a 9.4% returns compare with that money. And that's great, right? If you're a passive investor and just investing in the overall SPY, those are great returns. You're not seeing that kind of returns in like the banks and savings accounts in bonds right now. But with my investment style, that account is right now sitting at 4,314, which is up almost 50%. That's almost 524% gains compared to if I would have just invested in the SPY. So I am beating the market and I am happy. And I definitely recommend you guys check out this website. So we can see MarketBeat is doing amazing, and luckily I hope it continues like this. Right now it's telling me that my current investment style is doing great and I should continue to grow my overall experience in that type of portfolio. So now let me talk about my strategy. My strategy is pretty simple for me, if I may say, and my strategy might not work for other people. To me, when I'm talking about my strategy, I always recommend everybody coming with an open mind. First, I invest in long term. For me, long term is the key. I'm here investing money that I know I won't see for the next 5 years, maybe even more. Second, always come with an open mind. There's no one way to invest, and don't let anybody tell you. I know so many people are going to come out here and they're going to tell me that I have way too many positions in my portfolio, but they don't know my overall portfolio size. Right, my overall portfolio allocations. So right now I have multiple positions. I have 55 positions. But these 55 positions, like I said, I've learned from many investors. Most of my favorite investors have about 20 to 25, 20 to 30 positions. I also know plenty of investors that have over 100 positions portfolios, and they're beating the market dramatically. So there's no one way. If there was one magical number to really invest in the market, then everybody would be doing that, but there's none. So what did I end up doing? I like that I'm seeing the types of returns from those that are having a 20 to 30 position portfolio. So out of those 55 positions, 25 positions make up almost 3/4 of my portfolio. The other 27, so 25 positions make up 71% of my portfolio. So I'm with those 25 positions, you can see I'm very heavily invested. My other 27 positions make up 29% of my portfolio. So on average, a little bit over 1% on those other 27 positions. And again, even like I said, open mind, even a small position, and we're going to see this, even a small position can be a great return for your overall portfolio. So my other strategies, take out emotions out of the game. Taking out emotions when investing is the greatest thing I have ever done in this. And it's a lot easier said than done. It took me multiple years. Like I said, I've been doing this for a few years now. And at first, when I first started, I thought I knew better. I didn't come with this open mind. And I was like, hey, Jose, you only need 10 positions and you need to, and taking out emotions is easy. I don't need to worry about that. But after multiple years, I honestly finally can say I have no emotions in my investing. If someone told me right now that one of my positions is down about 15%, I take a quick read of why, if it's there any fundamental changes. If there's not, I honestly just ignore it and just wait over time. And that's where I do my due diligence. So I take out emotions by having multiple positions and by doing my due diligence. Then when I buy companies in the following. I buy companies with strong markets, high revenue growth, strong balance sheet, and I buy winners. So it's pretty crazy. I'm buying companies with high revenue. This is something I've learned from growth investing. I buy companies with strong balance sheets. This is something that I've learned from valued investing, right? So I've tried to mix from not only my position sizes, but how I buy companies by different investment styles and have created my own style. And like that's what I said, there's no one way to invest. At the same time, with these 55 positions, I'm honestly in only about 7-8 markets. The markets I am very, very bullish are on the esports, cloud servers, tech components, cloud securities, consumer products, business products, e-payments, and e-commerce. 8 markets. So within these 8 markets, I have 55 positions. But out of those 55 positions, they only fall into 8 markets, and 25% of those positions make up almost 3/4 of my portfolio. So it's crazy. Like I'm very I'm diversified to some extent, but at the same time, I'm also very strict to what I invest and where I invest. So it's a mixture of both being of all these investment styles that I've learned. So now let me show you guys some of my top 5 winners, and then I'm gonna show you guys some of my losers, because there's always losers in this, and then we'll move on to my portfolio. So my top 5 winners right now, as of October 11th, my top 5 winners are Sea, Fastly, Square, AMD, and Huya. These were actually my top 5 winners last time I did this video, except different order. So it's exactly the same 5 companies, but just the different orders. Sea right now is killing the market, and you can see Sea right now 77% returns, Fastly 165%, Square 200%. I have a triple bagger right there. AMD 100, almost 95%, almost 100 bagger. Huya up 44%. So we can see very diversified, and all of these are hitting different markets. My top 5 winners make up $5,200. My top 5 winners make up almost over one third of my total returns. Then I have my top 6 to 10. This is Roku, Celsius, CRNC, Activision, and Microsoft. And this is a little different compared to same time last month. Last month I had Spotify in here. Spotify is not there. I also had Google. Google is no longer in here. So we can see how they change over time. But this is about $3,100. So that's my top 10 winners are over 50% of my total gains. And you might be like, Jose, why don't you just invest in your top 10 winners? Obviously, if I knew they were going to be my top 10 winners, I would obviously just invested in them. So I have, and now let's take a look at my losers. My losers are, I have my top 5 losers are Jumia, Intel Corporation, Dropbox, TW, and Nintendo. And look at this, Nintendo is my 5th loser, and it's only down $11. Jumia is my biggest loser, and that one's down $103. So that's insane, right? My total active losses right now are 267. I also have some realized losses that I ended up selling some positions that I ended up losing, and those positions were 1,071 of losses. So my total losses right now are about $1,300. Again, nowhere near I think my biggest winner, who's SE, which is my biggest winner, can kind of just cover all my total losses on its own. My being diversified, it helps me out that, hey, my biggest losers don't really affect me as much. Now let's take a look at my positions. So here I have in the first, you'll see the number, what number they are in total size. So my number 1 biggest position is Huya. Then I have the ticker name, I have their current value, I have their cost basis of how much I ended up buying in them. I also end up having my total position size right now and my tier portfolio. I have 3 tiers in my portfolio. I have tier 1 stocks, which are my favorite stocks, the ones I believe will be the best winners overall. And these tier 1s, I have 9 tier 9 stocks. This is Huya, Sea, Microsoft, Google, Facebook, CRNC, Spotify, and Techie, Tencent. Forge, and then I have tier 2. Tier 2 are ones that I do believe will do great, and at the same time, I just can't put them in the tier 1. At the end of the day, all tier 1, tier 2, and tier 3 are ones that I believe will beat the overall market. Tier 3s are my smallest positions, but at the same time, I do believe they will be multi-baggers for me and do better than the overall market. Now let me show you guys my top 5. So my top 5 winners are the super green ones. Out of my top 5, Huya is my number 1 position. This is a tier 1. Then we have SE, which is another tier 1. My other 3 top 5 are actually tier 2 stocks, which is AMD, Fastly, and Square, like we saw. Those are all tier 2 stocks. So here I'm seeing, hey, Jose, good thing you did not only invest in just tier 1 stocks, because if you were only invested in those 9, in those 9s, they should have been your top 9 winners, but they're not. Then if we take a look at my top 6 to 10, these are my light green, and this is Microsoft, which is a tier 1 stock, CRNC, which is a tier 1 stock, Activision, which is a tier 2 stock, Celsius, which is a tier 2 stock, and Roku, which is a tier 3 stock. So again, now we're even seeing a tier 3 stock here making its way into my top 10 winners. So again, this shows me that it shows me 2 things. One, if I would have just invested in tier 1 stocks, I would have done great, right? My returns would have been amazing, would have been good. But by me having this multiple tier stocks, some of the ones that I didn't put in tier 1 are still doing great returns for me and doing great, are providing me with strong profits. Now, if we take a look at my top losers are tier 3, and that's Dropbox, Nintendo, TWOU, Jumia, and Intel. Intel is the only one that's tier 2. So I'm happy, right? Because when a position starts off in my portfolio, they start off at kind of a tier 3, and then I get to do a little more research on them, and then they start moving up. So Intel is a tier 2, and it's one of my top 5 losers. But look, my top 5 losers barely make up 5% of my portfolio. So by me having these tier levels, it helps me build up on strong positions. But by me having different tiers, it allows me to open up my portfolio to different things. And we can see, right, at the end of the day, it shows me that I'm a great investor picker. We see some of my top returns are both from tier 1 and tier 2. At the same time, I'm not the greatest picker, because if I was, my tier 1s would have done amazing. So right now, my portfolio is exactly how I want it to be. And like I said, you guys can pause this real quick and see my overall position size, what tiers each stock is in. And these tiers are not guaranteed, right? It's maybe my next video, one of these might end up going from a tier 3 to a tier 2. Maybe a tier 2 might go to a tier 3. Maybe a tier 2 might go to a tier 1, and so on and so forth. And that's the thing. Never set yourself to one way. Never think that there's only one way to invest, and don't be scared to have change. You're not trying to prove anything to anyone. I'm not here trying to prove anything to anyone. So if I make a mistake, I made a mistake with Intel, I made a mistake with Jumia, but that's okay. I understand that, and it's okay to change your style and to just keep overall learning. So I hope you guys enjoyed today's episode. Like always, make sure to hit the thumbs up. It helps the small channel out so much. If you guys want to learn more about me, check out the Discord channel, which is free to anybody that wants to join. So take care, guys. Have a good night, and see you next time.